Happy Monday out there, Team 42. It's your skipper here, Darius to present our macro minute for Monday, October 21st, 2024. Hope everyone had a great weekend. So, as always, we'll start with our executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So, today's key macro questions are: will China continue to add to recent stimulus measures? And will cooperation among BRICs accelerate de-dollarization of the global economy? Our answers are: today, Chinese banks cut their benchmark 1-year and 5-year loan prime rates. At the Politburo September meeting, Chinese leaders vowed to stop the property market from declining further. Property price data released last week suggests they have more work to do. Investors should expect more announcements on the fiscal stimulus front by the end of next month. This week, leaders from Brazil, China, India, and Turkey are joining Russian President Vladimir Putin in Kazan, Russia, to strengthen economic ties. Per Russian media, the upcoming BRICS summit will discuss the transformation of the international financial system, the development of interbank cooperation, and the expansion of mutual settlements in their own currencies. Their agenda is consistent with our fourth turning influence expectation of declining global economic and geopolitical cooperation. A multipolar world is one that will demand fewer and fewer U.S. Treasury securities, even though U.S. public sector debts will continue to grow exponentially. The Federal Reserve is the only institution in the world with a balance sheet large enough to capitalize the growth of the U.S. public sector in a fourth turning, and it will. Transitioning to our 42 Macro dashboard, as always, this will wrap up with a question from our community. This one's regarding our VAM signal with respect to TLT. It says, hi, DD, good morning. I was wondering if you have the slide below featuring TLT. I'm running a customized version of KISS using TLT, now shorting 20 plus years with TBF, since you recommended to eliminate that, and my fixed income portion of the portfolio. I wanted to know how good VAMS is specifically related to this specific security. Huge fan of your work. Keep up with everything you're doing for the retail investor community. So appreciate the kind feedback there. So just a quick background. What the client is showing in this chart here is just a screenshot of our VAMS back test for the stock market and for the crypto market. And if you look at the actual results, if you are the simplest way to interpret the chart is if it has a 96% upside capture ratio in the stock market and 98% upside capture ratio in Bitcoin. So another way to say that is when our VAM signal is bullish on these assets, 96% of the S&P 500's return has come when our VAM signals indicated the S&P 500 is bullish. 98% of Bitcoin's performance has come when our VAM signal has indicated the asset is bullish. And so kind of looking at that for the treasury market, that statistic is 82% for treasury. So if let's say treasuries are up 100%, over since January of 1998, 82% of that 100% would have come when our VAM signal is indicated the TLT was bullish. And then obviously we have a negative capture ratio when the market is negative. So that means when our VAM signal is bearish on this particular asset, the asset typically goes down. Its negative performance is concentrated when our VAM signal is negative. And then secondarily, if you look at this from a market regime nowcasting perspective, which in my opinion is even more powerful, TLTs, 110% of TLTs are not TLTs. 110% of the 25 plus year Treasury total return index's return, which is what obviously TLT is mimicking. 100% of that index, 110% rather, of that index's return since January of 1998 has come when our market regime nowcasting process indicated we are in a risk-off market regime, versus minus 10% has come when our market regime nowcasting process has indicated we are in a risk-on market regime. So again, it's all what we're using our systems for is to identify periods of concentrated performance. You can be long everything all the time and make no money, or have very poor risk-adjusted returns, or you can be long the things that are supposed to go up in the certain economic and market conditions, and short and or out of the things that are supposed to go down in certain economic conditions. And so that's exactly what our market regime nowcasting process does, is identify those conditions sort of in real time, so that when they change, you can make the appropriate changes on your portfolio to remain on the right side of market risk. You don't want to be long a bunch of treasury bonds in a risk on market regime, as this data indicates. But when you're in a risk off market regime, that's when you get all the concentrated performance in treasuries. And obviously, as you know, we are not in a risk on market regime currently. So we're wrapping up there. Darius presenting our macro minute for Monday, October 21st, 2024. Everyone have a wonderful day out there. Best of luck. We'll catch you back here tomorrow. Cheers.